Mortgage rates just dropped. And if you're looking at homes in the Frisco, Prosper, or even North Dallas area in the $1 million range, this is where most buyers make a very expensive mistake. You see, because when rates move, average buyers react. Sophisticated buyers reposition. And there's a difference. Let me explain what's actually happening and what higher level agents and buyers are quietly doing right now. You see, whenever you hear rates drop, the first instinct is, great, I'll wait for them to drop more. Or, it's time to jump in before everyone else does. Both reactions are emotional. Neither is strategic. And here's what most people don't realize. In the luxury price point, especially $1 million and above, your mortgage structure matters more than a quarter-point headline change. And this is where I see people leave money on the table. The North Dallas area is not a typical market. We have corporate relocations, executive level income, high growth communities, and buyers who are financially sophisticated. Yet I see smart professionals choose financing based on surface level rate headlines. And that's not how capital markets work. Here's the mistake. Locking into a wrong structure simply because you saw a 30-year fixed rate move down, most buyers only ask one question. What's the rate? Sophisticated buyers ask, what's the strategy? Very different conversation. Right now, there are programs up to $1 million loan amounts offering sub 5% starting rates on a 5/6 ARM. And before you react emotionally to the word ARM, let's slow that down. A 5/6 ARM means your rate is fixed for 5 years. 5. In North Dallas, the average home move-up luxury buyer does not keep their first mortgage for 30 years. Career change, equity grows, opportunities shift, refinancing windows open. So the real question isn't, is a 30-year fix safer? The real question is your capital positioned intelligently for the next 3 to 7 years? That's how sophisticated buyers think. Look, if you're buying a $1 million home and you're automatically choosing a 30-year fixed without reviewing structured ARM options, you're not being conservative. You might be being inefficient, and those aren't the same thing. Now, let me be clear. This isn't about pushing an ARM. It's about understanding options most buyers never review properly. In-house delegated underwriting, jumbo flexibility, and capital market access, these things matter when structuring loans at this level. The top agents in Frisco and Dallas already understand this. When you're financing at $1 million plus, you don't just shop the rate, you shop execution and structure. Now, serious agents know that the wrong lender can cost a deal in underwriting. The right lender structures it correctly up front. There's a big difference between quoting and executing. Here's the strategic part most YouTube videos won't tell you. When rates dip slightly, competition increases. Luxury inventory tightens. Negotiating leverages shift and buyers feel urgency. So if you're reacting emotionally to a headline, you may overpay in price what you think you saved in rate. Sophisticated buyers analyze both sides of the balance sheet. Now, if rates drop by a quarter point, but you overpay $40,000 because your competition heats up, did you really win? That's not a rate conversation. That's a strategy conversation. There's a reason experienced luxury agents prefer working with a direct lender that control underwriting internally, because structuring flexibility matters, because jumbo guidelines aren't always a one-size-fits-all, and because complex income, bonuses, RSUs, business ownership, they require precision. And when you can access broader capital markets instead of one narrow channel, you can often create better alignment between rate, structure, and long-term planning. Sophisticated agents already know this. If you're buying in the $1 million range in the North Dallas area, you don't need noise. You need clarity, and you need to know what structure fits your timeline, what rates are likely positioned in context, and how to use temporary structures intelligently, and how to maintain flexibility. That's confidence, and confidence wins negotiations. The goal isn't the lowest headline rate. The goal is intelligent leverage. That's how higher level buyers think. If you're considering buying in the Frisco, Prosper, Plano, or North Dallas area, especially in the $1 million range, before you lock anything, book a free mortgage strategy consultation. We'll look at 30-year fixed options, ARM structures, payment differences, liquidity preservation, and likely a 3 to 7 year trajectory. No pressure, no generic quoting, just strategy. Because when rates move, average buyers react. Sophisticated buyers reposition. And if you're operating at the $1 million level, you should be thinking strategically. Go ahead and click the link below and schedule your consultation. Let's structure this correctly.